Garbage April job report and the market says buy, which confirm what the Fed has been stressing all this time that the unemployment is higher than we are seeing. They are seeing a highly distorted employment status in the US.
Kind of ironic, don't you think? A lot of people still out of a job and the market is happy about it because that means potentially more stimulus coming since the employment data is showing a lot of people are still out of a job whether they choose to be.
Yep, sometimes it is what it is. I think it's important for us to know that the market does whatever it wants to do, and the news is only used by the media to justify what happens in the market.
It'll be interesting what the Fed will do for the next interest rate decision because the market is overheating, but tightening QE is probably going to slow down the recovery.
Agreed. Let's talk about that today in a bit then.
In addition to that, the market seems to be holding the first support level for NASDAQ. We'll also talk about what to expect next week.
Great, and we will cover some more detail from NEO's earning last week.
Lots of good stuff, so let's get right into it.
Absolutely. Before we do that, please give us a thumbs up and subscribe so you don't miss our next weekly update.
The Fed has kept short-term interest rates near zero for more than a year and allocated more than 5.3 trillion in stimulus spending.
So what are you trying to say? That the economy is inflated?
Exactly. Even Powell recently said that primary tool to control inflation is through higher interest rates.
But the market still reacted to what Yellen said on Tuesday.
I think Yellen is testing the market for Powell, since Powell can't really come out and say, oh, we might need to increase the interest rate right after saying that the Fed will keep interest rate near zero last week.
Could be, but she's also right for saying that we need to pay for some of the things that we are doing, and we should be concerned about the large deficits the US is running.
I agree. I think Powell agrees with that, and now they know the market can't handle the truth.
I want the truth! You can't handle the truth!
When do you think the Fed will actually tighten QE?
Canada just recently tightened their QE, and UK is planning to do so toward the end of the year. So my guess, for US maybe a year from now.
When do you think Powell will raise the interest rate?
The Fed will likely reduce its QE before it commits to an interest rate increase, possibly toward the end of 2022, because if they raise the rate first, it will be more expensive to maintain QE.
I think it might be slightly earlier than the end of 2022 for raising interest rate. Regardless, that means the market will still have some room to run.
Exactly. Let's review the markets this week and see what we can expect for next week.
Yep, the overall market sold off after Yellen suggested raising the interest rate.
The Nasdaq led on the downside as tech dropped about 2.5% for the day.
Despite a strong earnings season and recent strong economic data, many investors, including myself, fear the Fed may actually need to raise the interest rate, which will make it tough for tech stocks already viewed as expensive by many investors.
Nasdaq gapped down on Tuesday and went straight to test the lower support area at 13,400. Tech quickly rebounded the following day and closed the gap at 13,780.
But that Friday close did not indicate any direction and leave us guessing for the weekend.
That's right. If we are able to close above the gap next week, we should be able to see a higher high. If not, we will see a bigger pullback into the following weeks.
Meanwhile, another new high pinned by the Dow and S&P 500 for the week.
For the S&P 500, first support is around 4,210, and the second support is around 4,120 if the market pulls back more aggressively.
I expect to see a greater pullback, but shouldn't be more than 10% based on the current market data and company performance.
We are still in an uptrend market, and every dip is considerable buy, and we will explain why now.
Like we mentioned in the beginning, the non-farm payroll is 266,000, which is a big miss from the 1 million estimate.
The government should be very concerned. This means that people either A, can't find a job, or B, the unemployment benefit may pay better than their job. So why would they go back to work if they can just watch TV at home and get paid? Which is why I think South Carolina and Montana are starting to cut unemployment benefits.
Right, and those jobs that pays less than benefits are usually labor-intensive jobs. And we know the economy can't only have white-collar workers. If we can't get those people working, that means the government has to keep the printer running to try to even out the imbalance recovery for different sectors.
And this solidifies the Fed policy on keeping QE and interest rate unchanged, which means that the market will probably maintain the current level and is most likely going to sideways for the next few months.
Which is why we don't expect drops more than 10%.
And don't expect 2020 rally either.
Yeah, let's quickly go over sector performances. This week's energy and material sectors are doing really well.
And tech didn't perform as well. But since the Fed decision and job report, we should expect the tech sector to continue rebound into next week.
NIO dropped about 6.5% after reporting earnings, and it was one of your picks last week.
Yeah, actually, we looked at the earning a little closer and found some details that we would want to bring up.
So the EPS big miss is actually good for NIO long term. It's actually the result of a one-time spending of shares buyback.
That means it is reducing the outstanding shares and effectively increasing value per share.
Looking at their revenue, it went up 481% from the first quarter of 2020, and vehicle delivery also grew 422% year over year. These are some impressive results.
Also, we haven't heard price reduction. So based on the delivery data and revenue growth, it shows that people are buying more NIO and are willing to pay a premium for them.
Yep, they were able to achieve a greater quarter with strong financial performance driven by higher deliveries and solid average selling price.
Not only that, we are seeing a positive gross margin this quarter, but also a 73% decrease from net loss year over year. And NIO expect to achieve positive earnings this calendar year.
They not only have great numbers, but they also getting NIO Park in Hefei, China. The construction kicked off at the end of April. The 16,950-acre innovation park has three main functional areas: smart manufacturing, R&D, and eco park. And NIO won't be the only company there.
As some of you may know, land in big city in China is very expensive, just like in the US. So this is really nice perk from the local government for basically providing the land for NIOs to use. And they won't have huge capital tied up in real estate.
And with an annual production capacity of 1 million vehicles, NIO Park is expected to realize a gross yearly output of 500 billion RMB.
We'll see about that. A factory takes time to reach production capacity. You need to build the infrastructure and train people. But good thing is NIO is also ahead of the game for autonomous driving in China. They are not quite as good as Tesla, but their CEO said that they currently don't see any competition in China.
Not only being a leader in China, they're also taking their talents to Europe. This Thursday, they announced their first store plan in Norway. NIO is telling us they will be selling more cars and receiving global name recognition.
My first pick of the week is MSOS. This is a wheat ETF that surpassed 1 billion in assets under management. I do see another wheat run as more states legalize marijuana, and now is a good time to prepare for it. Looking to add more around 40 to 41.
My first pick is Hydro Farm. It is not profitable just like any other growth stock. But while everyone is getting slaughtered, it just doesn't care and maintains an uptrend. I'm waiting for a better risk reward and getting in below 55 for a short-term trade. Looking at the major shareholders though, it has 26% individuals/insiders. So if those people decide to run, this stock will tank big.
My next pick is TIGR, nice entry around 16 to 16.5. This is a leading Chinese fintech, and the company is being called the Robinhood of China. Its revenue is growing at a triple-digit pace, and it has its sights set on international expansions.
And I know we have mentioned this many times, but I just like semi a lot. And Qualcomm really has been respecting the 200-day average. So it's a buy for me between 132 and 133.
Thank you for watching. If you find this video helpful, feel free to give us a like and subscribe for more content like this.